Hello, I'm Hannah Wallace and welcome to FinextraTV at Sibos. Calling into our virtual studio today to talk about how technology is helping businesses become more resilient in a COVID world is Gwynne Master, Managing Director and Head of Working Capital Solutions at Lloyds. So Gwynne, thank you very much for calling in. It's good to have you on.
It's a pleasure to be here, Hannah. Thank you.
No problem at all. Really good to have you on. So yes, in the wake of the pandemic's disruption, that word resilience will be the watchword for many management suites, won't it? So tell us, what have you seen have been the shifts in this space, and what challenges do businesses need to consider going forward, and what do they need to be resilient of? Let's start there.
Sure. So I guess I'd start, Hannah, with how we look at disruption, probably from two perspectives: our own financial and operational risk and resilience, but perhaps more so from a customer standpoint. Our role is to help clients build resilience, and our clients are facing a series of concurrent stresses, not only the pandemic, but also other factors such as supply chain pressures, inflationary headwinds, which we're seeing in the papers today. These simultaneous stress points are fundamentally testing client resilience. From a working capital perspective, which is really my area of expertise, supply chain disruptions have brought businesses increased costs. It's really highlighted the need to investigate new ways of working, such as finding additional suppliers to plug the gaps, spending more on technology to increase visibility within the supply chain and the risks that run through the chain. Our August UK recovery tracker showed that factors such as haulage driver shortage, global supply issues are causing UK manufacturing lead times that to lengthen to the greatest extent since really, I think, since the peak of the pandemic in April 2020. So I guess I'd say whether you're a bank or a corporate, those that haven't invested or didn't invest in technology to manage supply chains were hit much harder. And right now, businesses will be looking beyond the past focus on efficiency and really increasing focus on resilience.
All right, that's really interesting. Thank you very much for setting the scene there. I think some good advice weaved in there as well. So tell us, what tools and technologies then do you think will help banks be more resilient, touching those points?
Yeah. Interesting. So I guess the key thing to remember is that resilience goes both ways, right? Banks are more resilient if their customers are more resilient. So it kind of kicks back to what I said before. In terms of what we do for our customers, we're more focused on the digital end-to-end delivery than ever before. This is all about simplifying that client journey, but also reducing the risks. And for us, it's about being able to offer solutions to help our clients manage risk. That's a huge benefit. Many smaller companies can't afford technologies like real-time tracking and monitoring, predictive analytics, or even the AI to support their decision making. And trade is really a perfect example of how digital processing can drive resilience by reducing risk. We're also piloting some tools that will assist clients with their day-to-day business operations. Assessing their working capital needs is a basic, but also monitoring and mitigating risks, even scoring those risks for themselves and against their peer group. On the business side, companies are focused on building capacity via alternative suppliers, creating resilience, those buffers in inventory, et cetera. And I think that's probably more important now over speed and efficiency. But what's key is that banks achieve both. And partnerships are a key way that we're doing this. If I look at technology, a new roadmap is really emerging for us, and there are three main categories of tools that I could share. I think the first is the risk mitigation and assessment tools, really tackling those issues like credit risk or risk of trading counterparties, working capital assessment tools to provide liquidity in the most efficient and cost-effective manner. That's not only to our clients, but also into their supply chains. The second thing I'd say is probably offering the right platform for clients to do their business with their buyers and suppliers. And these need to be as simple as possible. And then third, I'd fold in ESG. It's really important to provide a lens on carbon to support customers in their transition to net zero, a crucial form of resilience.
We're seeing sustainability and ESG matters at top of the agenda as well. And thank you, you've led me quite nicely into my third question then, is around sustainability, because this is another topic that also ties in with resilience as well, doesn't it? So how do you see agendas changing then to accommodate this transition to a more sustainable future then? What about that?
So I think, in terms of sustainability, it's a really exciting time. It's something that's very close to my own heart personally, and Lloyds has been very public about its commitment to sustainability. As the UK's largest financial services group, we can make a real difference to tackling climate change by financing Green Future. And we have a very ambitious goal to help reduce the carbon emissions that we finance by more than 50% by 2030. So there's a lot of tech out there to help our customers assess their carbon footprint within the UK. But where it gets really tough is assessing supply chain carbon footprint. And when you look at the average commercial business or manufacturer, 80% of their carbon footprint is in their supply chain. So how do you tackle that, especially if you're a small company? Assessing sustainability in supply chains can be really complex. Small companies lack the resources to stay on top of their relationships, and this is where banks can help. Smaller companies know their immediate suppliers, what we call tier one suppliers, but it's far more difficult to monitor suppliers of suppliers, the tier two, the tier three, etc. So as a customer bank, we need to understand our customers' carbon footprint, which includes their supply chain. And I'd be, on my agenda, I'm happy to share, there are a few things to get there. One, visibility of supply chain. Importantly, how can this be achieved without additional cost or burden on the SMEs that are already stretched? The analytics and ESG scoring leg of this, standardized definitions are going to be an enabler. We'll get there. We're currently working with the ICC and some other industry groups to establish these definitions. And then finally, really putting customers in the center as we pilot. We're, piloting supply chain finance. It plays a key role in helping deploy liquidity across the supply chains. We're offering flexible programs, but it's also important to collaborate with others. Like I said, the ICC, BAFT, IFTA, to help enhance the level of support that we offer.
Well, Gwynne, it's clear that you're extremely busy at Lloyds. You've got a lot on the agenda there. And I think you're in a good position then to give us some advice. And what advice would you give to those navigating what continues then to be a pretty rocky and, as you say, complex operating landscape that's in there?
So I'm not sure if it's advice for others, but it's certainly advice that I give to myself. First and foremost, leaders have got to expect the unexpected and come to better grips with the inevitability of what you call disruption, right? To build resilience. This really has profound implications on the choices that we're making on technology investment, network strategies, our suppliers, our clients, and the products and solutions that we deliver and provide to our customers. Maybe also as a second, the costs of disruption are significant. And at Lloyds, we're adopting ways to mitigate them, not only for ourselves, but really for our clients. And then maybe last, banks are strengthening relationships with existing clients. That is just so key. Implementing new types of risk management teams and processes, including ESG teams, and really investing in the technology with customers in the room. And that's going to continue to drive the improvements in the products and the services, as well as the support that we offer to clients.
Brilliant. Well, Gwynne, thank you so much for sharing your insights with us. I've certainly learned a lot and looking forward to taking these discussions into Sibos. But for now, we'll leave it there. Thank you very much for calling in. It's been a pleasure.
It's always a pleasure to speak with you. Thank you.